Hi, I'm Ashley Daswa, Senior Investment Specialist within Sanlam Corporate Investments team. I'm here to provide you with a comprehensive account of the performance of the South African and global capital markets, as well as the macroeconomic overview in the second quarter of 2024. So let's dive into key highlights. Inflation continues to be sticky at current levels, with bond markets projecting only a minimal improvement in the US over the next 5 years. Central bank rates remain at cyclical peak across the board. However, the Fed Chair Powell has suggested that the case for the US cut rate is strengthening as the country is no longer considered an overheated economy. Despite more muted expectations for policy easing relative to the start of the year, global economic activity is still expected to continue expanding, albeit at a slower pace and below historical averages. South Africa's economy contracted by 0.1% in the first quarter of 2024, missing the market expectations and falling below the 0.3% posted in the previous quarter. Main detractors remain manufacturing, mining, and construction, as load shedding continued to weigh on economic growth. Regional disparities in inflation and output gaps have resulted in different central bank strategies, with some countries in a position to ease interest rate earlier than others. By 2025 and 2026, central banks are expected to edge towards their neutral rates, which may have increased due to structural changes such as fiscal dominance and demographic trends. A decade-long trend of rising protectionist measures, escalating social unrest, and geopolitical instability appears to gather momentum as this year witnessed a record number of national elections, offering populist movements a chance to solidify their influence. Following the 2024 national provincial elections results, which ushered a new era of coalitions in local politics, SA has now entered a phase where collective decision-making is crucial for effective governance. As such, the stability of incoming government will hinge on the political maturity of the represented parties in parliament. Major global indices advanced in the second quarter of 2024, driven by US tech euphoria and the hope for a soft landing for the US economy, supported by emerging signs of growth in Europe, China, and Japan. The dominance of the mega-cap technology stocks continue to influence global equity market performance, with Magnificent Sevens, notably Alphabet, Amazon, Apple, Meta, Microsoft, Nvidia, and Tesla, contributing half of the MSCI World year-to-date gains and over 90% of the June returns. Nvidia has emerged as a standout performer among the gains, posting an impressive monthly gains of 13% and an extraordinary 150% year-to-date increase in USD. Emerging market indices delivered strong 4.1% gain over the second quarter, outperforming their MSCI World counterparts, which returned 2.8% in US dollars. The South African equity closed in the second quarter of the year in a positive territory. April started on a strong note as optimism over corporate earnings lifted domestic equities, with further support coming from better than expected economic data. In May, national elections took center stage, with various surveys suggesting that the national ruling party could lose its parliamentary majority for the first time in 30 years. Speculation over a possible alliance dominated headlines in June after a political survey proved to be correct that the ANC failed to win outright majority at the polls. This prospect of market-friendly outcome helped lift domestic equities higher by month-end, buoyed by the news that the ANC could enter into an agreement with the Democratic Alliance and other smaller parties to form the government of national unity. In conclusion, the second quarter of 2024 witnessed a mix of positive and challenging trends in both South African and global capital markets. While the South African equity markets showed resilience, the global equity market reached record high, fueled by AI euphoria. The fixed income market remained stable, and the economic recovery continued, albeit at various speeds across the countries. It is crucial to approach our investment decision with prudence and consider the prevailing market conditions. Diversification, risk management, and staying informed about economic indicators and global events will be essential in guiding our pension fund to achieve its objectives. Thank you for your attention.